Hello guys, on today we are going to be discussing about knowing how to trade a valid pullback. All right, knowing how to trade a valid pullback. I have my journal where I journal all my trades down, how I follow the pullbacks. All right, so I'm going to be showing you how I'm going to be showing you my journals. All right, so if you are new into my YouTube channel, kindly click the subscription button. I make use of the TRSS strategy. All right. And it's very nice. We always follow the market trends. So if you want to know more about my strategy, kindly click the subscription button. All right. And click the like button as well. Share to your friends. So right now, I'll be taking you to my journal. All right. Where I wrote down everything concerning this, and I'll be seeing it in the chat as well. I'll be showing you everything as well in the chat, all right? So let's see. All right, right now I'm currently on this. So I'm currently on this now. This is the journaling. If you notice a valid pullback here, see what a valid pullback is talking about. A valid pullback in trading refers to a temporal price movement against the prevailing trend. A temporal price movement. If you notice that price is an uptrend, let's say price is making an uptrend move, a temporal price movement, that temporal price movement that is pushing it down come back to retrace before a continuation. You can see it here. It's a temporal price movement. So you need to monitor the momentum of the candlestick, followed by a continuation in the direction of that trend. You see it? Followed by the continuation of that trend. It's a common entry point for trend following strategy. See it. For a pullback to be considered valid, it usually meets several criteria. All right. For it to be considered valid, it usually meets several criteria. So these criteria, so we are going to be discussing about it. We are going to be talking about it right here in this video. So first of all, we're discussing about the characteristics, which are these criteria. So on the characteristics which I have here written down, I say characteristics of a valid pullback occurs within a clear trend. You need to have a clear trend. You see it, there should be a strong trend, uptrend or downtrend before the pullback. There should be a strong momentum uptrend before the pullback will start happening. All right, using a moving average trend line or structure, making a higher highs and lows, or higher highs slash low, or lower high slash high slash low to confirm. All right, so it's going to make a higher highs. You will notice that the normal high, if if it's an uptrend, you notice that the higher high will be breaking out. Okay, let me show you this in the chart. Let me let me show you this in the chart. All right, let's see this. Okay, let me share this again inside here, which is inside the chart here. Okay, let's do this. Uh, if you notice right now, if price is making this kind of move, what we're actually talking about in the book, if you will notice, this is an uptrend making a higher highs, higher lows. So this is when you consider that price is currently moving up. All you have to do is to wait for a continuation, which is a pullback. A valid pullback must not come just straight boom. No, it doesn't do that. If it does that, leave it. All right, to give you, leave it, just leave it. A valid pullback must come down in this way. It must come slowly. So the more slowly it comes, the more active you see it get into this particular zone. You see the price moving back up and then changing direction again. It comes slowly again. It comes slowly again. It retests and then it changes direction again. So this is how it goes. All right, you see it changes direction again, changes direction again. All right, so this is what is actually talking about here in this particular zone. They say break okay, we're in the number one. All right, there's occur within a clear trend. There should be a strong uptrend or downtrend before a pullback will occur, which I just showed you guys in the chart trading view. So the number 2 shows control and shallow. Price retrace gradually, not with sharp reversal candlestick. Like I just explained to you guys that price shouldn't retrace with a very sharp candlestick, like a very sharp move. If you retrace in a very sharp move like this, uh if you retrace in a very sharp move like this, let's say it's going up and then it retrace like this, avoid it because it might retrace and then cut continuously going. So if you wanna stay in a very good trade, allow the price to come slowly, reaching on this particular zone, then you continuously buying with price. All right. So always monitor the momentum of the candlesticks that are being printed. You always monitor the momentum of the candlesticks that are being printed. All right. So right now we are heading back to number 2, which shows often retrace to key levels like the Fibonacci retracement levels, which I always like using. I like using the 50%. That's move very, 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 very active, and 618. Those two are very, 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 very active. You see 3.218, sorry, 38 to 38.2, 50, and then you see 38.2%, 50%, 60, 1.8%. They are a very strong zone for price to move and reject. All right. So I'm using a moving average 20 and 50. Using a moving average 20 and 50, e.g. 20 and 50, it's usually at stronger in a zone. We have a support level zones and then trend line channels. All right. So you have to mark it out either using a Fibonacci retracement for you to discover when price is heading down. You need to first of all know whether price is heading down like this now. Then as price is heading down, let's say price is going up and then went up, you don't know actual price where price is going to reject. All you have to do is to pick out your Fibonacci retracement, measure from these highs back to this zone. If you notice, I use 0.618 and 50%. You see it mostly. You notice price will come into this particular zone and then continuously going back. By then it would have smashed your TP if you take here. So moving average helps you to determine when price is actually going to make a retracement. You just take 2 risk reward ratio. This is it. Price will definitely smash you out. All right. So Fibonacci retracement always help. I use it as well to determine the direction of price, where price is heading to. I use it. I make use of it very, very, very well. Or your support zones. Let's say price is heading back down. Or let's say price is heading back up. Let's use a downtrend this time. Let's say price is heading back down, making a lower low. So all you have to do while using a support zone is to come back on this particular zone where price retraced, or back to this high where price did what, rejected, and then continuously heading back down. This is how you can use the support level on this particular zone to determine price retracement. This is how market does. And then you notice price coming back again, then retracing on this particular zone, continuously going back again. So this is how price move. All right. Hope you are grabbing. So right now we are currently on the number 3, which is low volume on pullback, which I just explained to you guys. You should notice that the momentum of price, the volume of price should be very, 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 very low. The momentum of price should be very, very low. All right. The momentum of price should be very, very, very low, right? Approaching a particular zone, which we have here, suggests the pullback is not driven by strong opposition sentiment, which I told you, don't allow price to come with speed. Don't allow price to come with speed. That is why you need my book to guide you. So if you need my book, use my description button, my description in my bio. You'll see my number, WhatsApp number, send me a DM, alright, to get a copy of my book. Alright. Followed by higher volume as price resume in trend direction. Followed as price is moving, then you follow it by higher volume. Let me show you guys in this chart. You follow it by higher volume as price is retracing. Let's say price is retracing and then you notice price moving. Let's go to a clearer zone. You notice price moving, making this retracement, making this move. All you have to do is to wait for uh to wait for a retracement, a rejection, the buyer zone telling you that price is actually buying. Have to take out this low here and then make a retracement either to this zone or back here. You enter a selling opportunity back to the next low. There must always be a confirmation for you to show that definitely that zone will surely hold. All right. So this is it. Currently on the number 4, which is price action confirmation. Reversal candles pattern. You need to use reversal candles pattern. You need to know candlestick pattern. If you don't know candlestick pattern, you need my candlestick Bible. It will guide you. All right. Reversal candlestick pattern. Pin bar engulfing inside bar. You see it, pin bar engulfing inside bar are key at your key zones. You need to use this at your key zones. They always work at your key zones. Me, I make use of mostly engulfing candlestick at my key zones. Once I see it, I'm striking. Whether the buyers the bullish engulfing candlestick, I don't buy. The bearish engulfing candlestick, I've sold. All right. So I make use of engulfing candlestick at my key zones. Break of minor structure or trend line on lower time frame. You figure out that on lower time frame, price will wipe out. Do like say you did some fake outs and then continuously going your directions. Why is that happen? That is why I don't like making use of lower time frame, because of those noise that are there making fake outs and then continuously going your directions, which are not very good. So we have confluence factors, multiple factors aligning. You need to combine both your moving average, trend line, bullish engulfing to improve the quality of your setup. All these things that I showed you, you need to combine them in one trade. First of all, you know the direction of price. You wait for the momentum of the price to the momentum of the sellers to reduce. Like you wait for the momentum of the sellers to reduce. You wait for the momentum of the sellers to reduce before you start buying with price again. So you wait for multiple confluence on that particular zone before you buy. Using a Fibonacci retracement, hitting on your particular zone. Then that zone, you notice that, okay, let me show you. Let me show you. Using on your okay, using your Fibonacci retracement, you notice that price is going down, is going on a trend line. You see it. It will align on a trend line. Then moving, if you are using a Fibonacci retracement, then you don't actually know where price will go. Then all you have to do is to use this. You notice that there is a low created here, and the price will have to come into this particular zone. Then before giving you a rejection pattern, tell you that price is actually heading back down. So all you have to do is to take a sell opportunity back here. Your TP should be at this particular zone. There is where you are going to exit the price. So I always make use of there's 50, 618. Those are my key levels. So I added the other one so that in case most of us are, because not all peers aligned with this. So some aligned with 318. So you can still make use of 318 in case if you the pair are trading aligns with that, you can also make use of that as well. All right. So you need to combine them. Number one, discover that price is on a downtrend, then using a Fibonacci retracement to figure out your entry position. Note that a trend line is being confirmed that price is on a downtrend. So everything now is confirming that price is on a downtrend. All you have to do is that when price approaches here, then you wait for your engulfing candlestick pointing that price is going down. Then you have to follow the engulfing candlestick when it breaks, and then you figure out hitting back down. So right. So this is it, guys. Don't forget to like and share this video to your friends to also learn as you learn as well. All right. So subscribe if you are not a subscriber of my YouTube. All right. So this is it, guys. Take care. Bye for now.